Is the Australian property market headed for a crash? Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Hey traders, as you know that some of the biggest things that makes you a successful trader is really learning the art of trade management and really good money management techniques. I've just recorded the video walking through all the steps that's really going to help you. So click on the box above that says trade and money management and to get access to this video right now. Alright, hey guys, I just want to give you a quick little update on the Australian property market with $1 trillion of Australian mortgages, and I would say this is very similar for even America. So if Americans, this may be very similar for you guys as well too. With $1 trillion of Australian mortgages, the RBA might be getting worried. So you can see here guys, so you can see that Reserve Bank of Australia frequently seeks feedback on the health of the economy. It might want to call the debt counsellors soon. Homeowners, consumers and property investors around Australia are making more calls to financial helplines as three warning signs back up the spike in demand. Mortgages arrears are creeping up as well too. Very, very similar to what actually happened in America too, right? But what's happening right now is that they can't drop rates anymore because it's going to inflate the bubble even more. Even you can see here, right? You can see that the writings now is showing that there was a bubble being created here, and so but they can't actually, if they start to raise rates raise rates up now, then what's going to happen is the raising of rates is going to cause this mortgage arrears are creeping up to be even faster. Lenders' bad debt provisions have increased and personal insolvencies are near at an all-time high. Tell me that's not a sign of a bubble. What this very first couple of paragraphs here, a couple of lines here, says it all, right? You know, you can see here it's steadily out of control. I don't know of too many financial counselor services where demand does not exceed supply, says Fiona, Chief Executive Officer of Financial Counsel Australia, who says the biggest increase in calls is from people suffering from mortgage stress. And the rates are low. Mortgage stress and the rates are low. There are more people who have got mortgages that they cannot afford. Australian households are among the world's most indebted after binging on more than $1 trillion of mortgages amid a house boom that fizzled out in parts of the country, but still soaring in Sydney and Melbourne. Look at this here. While most of the capable most are capable of servicing their debts, a worsening of the credit metrics have seen executive and analysts take a more caution tone. You know, we talk about here the financial stability. So if the concerns are understandable, Australia's private debt has soared to 187% of their income. Holy dooly! The debt is now 180% of the income of Australians, from about 70% in early 19s, encouraged by low interest rates. What's happening right now? Low 90s? Low 90s? What do we have? Incredible, right? In November's speech, this Lowy said that while most households are managing their levels of debt, many feel that they are closer to their borrowing capacity than they once were. And so you can see here that it's just an incredible thing. Let me actually just see here. While most borrowers in Sydney have plenty of equity in their home and as prices are rising, that's not the case elsewhere in the mining state of Western Australia, etc., etc. You know what? I'm just going to leave it there. I'm just going to leave this up in the discussion, guys, because this is here. Lenders are watching the indicators closely as the RBA, after a 7-year bull run, annual cash earnings at Australia Big Four banks fell last year for the first time since the financial crisis. How the hell does banks actually lose money while we have one of the biggest property booms ever in history? when it comes to like the Sydney property market. How does that happen? At the same time, their bad debt expenses, which is encompass both businesses and consuming lenders, jumped 39% to 5.1 billion, the highest since 2012. Yeah, a lot of debt there. Okay, but the hardest indicator to track may be borrowers worried about making their next repayment. Counsellors at the National Debt Helpline deal with such problems and are now even getting calls from property investors, said, this person here. In the last quarter, 2016, phone calls to service jumped 12%. In the last quarter, 12% on the previous years to an average of $11,000 calls per month, she said. That's double the rate of increase of the same period earlier. So, anyway, guys, you can take what you want to take from this, but you can read between the lines that something is brewing behind the scenes here. And people that haven't seen this for a while, I think Sydney market's getting ready for a nice cooling period. It's already started in Melbourne, and I don't know for you guys in America, you guys might be going through the same thing as well too. But Australian, I look at some graphs with the the Sydney property market. I'm just like, this is just crazy. Who is buying into these places? And everyone falls for it, right? Everyone's like, oh my goodness, property market, it's just gonna keep going up. It's just going to keep going up. It's different. Our market's different. It's different this time. You don't know the situation. Our economy's different. Blah, 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 blah. And it's like, man, oh man, oh man. So anyway, guys, what do you think? Do you think what I've said through here with my illiterate, uncapables of reading what I did here, what do you guys think? Am I reading too much into this? My personal thoughts are there's a lot of signs here that are in cross. Personal insolvencies are at an all-time near high. Mortgage arrears are creeping up. To me, that spells that. So anyway, guys, let me know what you think. Hey, thanks for watching. If you'd like to get more free education about trading, then click on the box that says free trading course. This is a free trading course. It goes for around 12 hours long. It's about 12 videos long. Covers everything from chart reading, mindset, trading systems, money management, trade management, everything you need to get yourself ahead in the markets. And if you'd like to get my help personally, then click on the box that says get John's help, and you'll be able to see how you can get my help personally. Don't forget to like, comment, and subscribe on the video. And remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.